Picture this scenario. One fateful day, maybe on a Monday morning, everyone wakes up and decides to redeem their stablecoins for dollars at the same time. I mean, that may never happen, but say it does. Ideally, everyone should be able to redeem their stablecoin one-to-one for cash. But did you know that 100% backed doesn't mean that all reserves are in paper bills or bank deposits? Well, today we're going to recap the current standing of the 3 biggest stablecoins on the market and dive into the nitty-gritty of the public reserves reports released by each. If it's not backed by cash only, then what? Well, stick around to find out. Before we start, here are some things to keep in mind. 1. Stablecoin issuers publish reserve attestations, which are a good start, but they're not as thorough as full audits. 2. Similar to traditional banks, stablecoin issuers make money through lending and/or investing, though not everyone agrees on who they should be allowed to lend to or whether they should be investing at all. Banks and stablecoin issuers assume that not everyone will be withdrawing at the same time and put that money to work, and so only a certain fraction of deposits is held as cash on hand that can be withdrawn by depositors at any given time. Okay, with that out of the way, let's start with the reigning champion, USDT. First mover USDT is by far the largest stablecoin with a circulating supply of about 66 billion, which is over 20 billion ahead of USDC at second place. Understandably so, as since its launch in 2014, it has now become the most common trading pair out there and overtakes even Bitcoin in daily trading volume. However, Tether has faced its fair share of FUD throughout the years.
Fear, uncertainty, doubt.
When Tether launched, its website read, "Every Tether is always backed one-to-one by traditional currency held in our reserves." This was met with controversy as it was revealed during a 2019 court case that they essentially lied about their reserves. USDT wasn't backed 100% by USD, but instead a combination of different assets, including cryptocurrencies, corporate bonds, precious metals, and a bunch of other short-term loans, which were dubiously parked in the same category as cash and cash equivalents. Now, cash equivalents in simple terms refer to financial assets that are liquid and easily convertible into cash, but more on this in just a little bit. So, after the controversy, Tether changed its tune on its website, and in fact, it wasn't until May 2021 that Tether revealed a breakdown of its reserves for the first time ever since its launch in 2014 as a requirement of the court case settlement. What disturbed investors was that over half of Tether's cash equivalent reserves were made up of unspecified commercial paper. In plain English, commercial paper is basically a short-term loan made to companies that is not backed by collateral. While commercial paper can sometimes be considered cash equivalents, as they ideally can only be issued by companies with high credit ratings, the highest standards are reserved for cash and government bonds only. That is, loans made to the government, which include things like US Treasury bills, notes, or bonds, which are often collectively termed US Treasuries. So that was back then. What do Tether's reserves look like now? Tether's reserves breakdown as of December 2022 reports that over 82% of its reserve is held in cash, cash equivalents, other short-term deposits, and commercial paper. 9% in secured loans, 5% to corporate bonds, funds, and precious metals, and 4% in other investments. Focusing on the more detailed breakdown here of the largest segment, we see that 71% of it is in US Treasury bills, 13% is in money market funds, which are a type of low-risk investment, 11% in cash and bank deposits, 5% in reverse repurchase agreements, also known as reverse repos, which are also short-term collateralized loans, loans and essentially 0% each of non-US Treasury bills and commercial paper. You will notice that the percentage of commercial paper held in Tether's reserve has decreased drastically from 49% to pretty much zero, which has now been replaced mostly with US Treasuries. Tether had previously stated its intention of reducing exposure to commercial paper, and by October seems to have been successful in doing so. Increasing exposure to US Treasuries is also good news. However, people may have mixed feelings on the other assets in its reserves. Ethereum co-founder Vitalik Buterin weighed in on the matter in November, tweeting that although he thinks significant improvements still need to be made, Tether's recent attestation has exceeded his expectations. Now, let's turn our eyes to the second horseman of stablecoins, USDC, which came into the picture 4 years after USDT. USDC issuer Circle has been publishing third-party monthly attestations of its reserves since its launch 4 years ago. With that and its relatively favorable regulatory standing in the US, USDC successfully positioned itself as the safer and much more transparent alternative to its competitor. USDC saw a meteoric rise, especially in 2021, fueled by DeFi Summer as well as Tether FUD. It currently has a circulating supply of about 43 billion. While USDT was still the clear leader in the stablecoin space, USDC grew faster and was closing in the distance between the two stablecoins at an impressive pace. However, USDC recently faced community backlash for freezing USDC addresses associated with Tornado Cash after the crypto mixer was sanctioned by the US government. USDC's market cap fell as the move had spooked holders and saw some flee to alternatives like USDT and BUSD. Alright, but what's in USDC's collateral balance sheet? USDC's reserves are much more straightforward compared to Tether's, as according to their attestations, the token is only backed by US Treasuries and cash. Their latest report shows that roughly 74% of the reserves are held in short-duration US Treasuries and the rest, about 26%, in cash. Now, moving on to BUSD, of which there are currently only about 22 billion in circulation. Recently, Binance, who by the way is not the issuer of BUSD, also made a bold move that likely contributed to USDC's drop in market cap. In September, Binance announced an auto-convert feature for USDC, USDP, and TUSD of existing users and new deposits into BUSD, signaling its aspiration to see its white-labeled stablecoin climb the ranks. Anywho, BUSD is also generally perceived as a safe option, as its issuer Paxos is based in New York and is strictly regulated by the New York State Department of Financial Services. They also publish monthly attestations of their reserves. As for BUSD's reserves, as of November 2022, they are similar to USDC in that it is backed by US Treasuries and cash, with the largest difference being that the cash amounts to a smaller portion at just under 2%. The rest of its reserves are in high-quality cash equivalents, with short-term US Treasuries at 27% and overnight maturity US Treasury reverse repos making up about 71%. So now you have an idea of what's backing that digital dollar in your wallet. While improvements can always be made, it's good news that transparency is steadily becoming standard practice and a minimum requirement in the crypto space. Also, demand for higher standards leads to healthy competition between stablecoin issuers, each striving to be the more trusted ones in the industry. Of course, as a result, the biggest beneficiaries are the users. So tell us, what do you think? Are these attestations enough assurance to you? And which stablecoin do you prefer to hold? Well, to cap off, it's worth noting that transparency is not just a stablecoin thing. Watch this video on proof of reserves to find out how crypto exchanges are following suit.